Now, to help its clients on investing in Africa, South Africa's Rand Merchant Bank is launching one of the most comprehensive documents on the subject. Where to Invest in Africa is what it's titled. It analyses about 45 countries in sub-Saharan Africa. Celeste Fauconnier, who's an Africa analyst at RMB, joins us now. Celeste, thanks so much for your time. So let's answer your own question, where to invest in Africa?
Well, it's actually difficult to just tell your client these are the places you should go, because our clients are very diverse. They look at different sectors. So the document tries to tell each client which sector they work in, which countries that we suggest. It's only a suggestion, but it's also just to make our clients aware of, do not just look at the overall aspects such as growth, inflation, just macroeconomic aspects. Also look at the operating environment of these countries.
We know that for a lot of investors coming into the continent, it's really a commodities play, mining, oil and gas. Those seem to be the sexy areas of investments. Where else can they go?
You're right, it's still the sexy environments, and we do still see resources being the game player for at least the next decade to come. Other aspects we can look at is consumption. Domestic demand is increasing significantly in sub-Saharan Africa. If you look at East Africa, especially Kenya, Tanzania, Uganda, you can see consumption increasing there. Growth in GDP per capita, growth in population, all those aspects just show you that consumption or retailers have got a nice and improved environment to go and invest in.
Estimated growth rates of 5.6%, give or take. How would that be an influencing variable?
Well, I think definitely growth should be one of your strong variables that you look at for your economies. But we must also remember there are some countries that experience strong growth rates over the past few years, mainly because some countries actually came out of civil wars or starting to build their infrastructure. So looking at just growth is dangerous. Maybe looking at our forecasts for growth for at least the next 5 or 10 years would be a good indication to see where growth is going to lead these economies. But also not to forget to look at other aspects such as market size, how many people are there, the business environment, all those aspects we try and look at in this document.
What pervasive risks exist? Because obviously you've spoken about the buoyant growth in the consumer class, spending power of Africans. You are talking about the commodities issue and the macroeconomic environment. What other variables need to be considered? We've just had this conversation with the lady at Fitch, and exchange rate volatility is something that many investors are concerned about, whether or not they should be going into dollarized economies or not. What other variables?
Exactly. There are lots of variables you can look at. If you are a resources sector industry and you want to go and invest in resources, obviously your first thing you should look at is your exchange controls. What type of controls do they have with actually creating a business, getting licenses? What are your taxes? There are so many variables to look at. One of the main ones also to look at is what type of policies your government that you are going to invest in have adopted. But we see that the reforms in most of these countries, and a good one to point out is Rwanda, significant reforms we've seen over the past few years. So those are the countries these companies rather should focus on.
Obviously you can't separate business from politics in Africa, and those reforms withstanding, many investors will tell you they're always worried about the legal regime, whether contracts will be honored, whether their property rights will be intact, whether wars of whatever scale would break out. How do you factor in issues like political risk?
Political risk was definitely one of the big issues we factored in this document. We looked at where are the most riskier areas, drew a beautiful map with heat maps and where the red spots are. Maybe don't go there if you're worried about that. But it's a big issue to look at. We have seen political risk subside slightly over the past few years, but it is still dependent on which economy you are going to look at. You've got political risk insurance. That's definitely an option we tell our clients to go and look into. We're telling them which companies they can probably go and JV with if they want to look at those type of things. But yes, political risk is definitely still a major issue in Africa.
What about those investors who are not brave enough to put in their money and start a business from scratch, the FDI players, the ones who just want to invest in equities, capital flows? There is the big problem that the capital markets are underdeveloped in Africa, and you don't have the most exposed of corporate networks. How is that an impediment, if at all?
That's right. We actually looked at all the surveys and tried to see what is the most problematic problematic factor for businesses wanting to invest or open businesses, and it's access to financing. Yes, you get your equity markets that are developed, but it's still only a few countries like South Africa, Nigeria, and Kenya. Other countries are trying to reform their financial markets, or at least access to financing. Some countries have access to corporate bonds or corporate bond issuances. It definitely depends on which country you're looking at. But we did see that financial development is increasing, especially over the last few years.
You've spoken about this buoyant consumer class coming through, and we do know we have a middle class with spending power over $5,000, standing at a figure of about 180 or so million people, give or take. But you've also got this group of people in the strata, somewhere between the proletariat and the middle class, who are earning or who have purchasing power of something like $10 a day, but you wouldn't really call them the middle class. But it's not a class significant enough to sustain a major retail operation. Is that a problematic issue when you're dealing with demographics? Is really how to understand the so-called consumer class in Africa?
Definitely. In our consumer piece in this document, we try and at least give the income brackets like you were talking about, because you get your high-end retailers and you get your low-end retailers. So not any retailer must not just look at the economy as a whole, must actually look at the income brackets. So yes, you still get those countries where the income is so significantly low that those companies won't even look at those countries. But trying to show our clients that even though you do break it in brackets, there is a big market out there for any type of high-end or low-end retailer.